LaRoche here with your pre-market intelligence briefing. Listen up. While everyone's cheering the KOSPI for hitting a new all-time high, if you look under the hood, the engine's on fire. This wasn't a rally. This was a violent rotation, and we need to figure out what it's telling us before the U.S. market opens.
So here's the puzzle. It's almost unbelievable. The smartest money on the board just liquidated over $1 billion in AI and semiconductor assets to buy shipyards. Yeah, you heard me. Shipyards. We're going to break down exactly what's happening and what triggered this massive signal.
And this is the conflict right here, plain and simple. We are witnessing a huge shift out of AI soft power, the world of algorithms, code, and clouds, and directly into kinetic hard power. We're talking steel, factories, artillery. It's a complete change in what the market thinks is valuable.
So, how do we decrypt this thing? Well, you have to ignore the headline number and follow the money. Because what the Korean market just gave us was a tale of two completely different markets, all hiding inside one index.
Okay, here's the surface story. This is what everybody sees. The KOSPI is at a record high. Looks fantastic, right? A totally euphoric risk-on signal. But this is exactly where the mainstream news stops and where our real work begins. And here's the truth hiding underneath. While the index was green, look at that giant block of red. That's the semiconductor sector getting absolutely hammered. Foreign investors were dumping chip leaders like SK Hynix like their hair was on fire. This is a classic quality divergence, and it is a massive red flag.
And here's just how big that red flag is. 1.6 trillion won. That's over $1 billion US. Gone. Net selling. This wasn't someone just trimming their position. This was a full-scale evacuation from the tech sector. And you know what? That money had to find a new home.
So what on earth is the logic here? Why this violent rotation? I think we're seeing the market create a brand new valuation model right before our eyes. I'm calling it the kinetic capability premium. And this was the trigger, a policy shockwave that hit the markets in Asia first. Reports started flying about a potential 50%, that's 50, increase in the U.S. defense budget. This geopolitical tremor instantly sent capital scrambling, forcing it to reevaluate who can actually build things. Now here's the key. For years, the big money has been chasing scalability, software, AI, stuff you can't touch. But today, that flipped. In a world that's rapidly rearming, physical capacity, the actual ability to bend metal, to build ships, to fill shells, that is now the scarce resource the market is desperately hunting for. I mean, just look at the difference. On the left, that's the old premium. Clean, digital, scalable. On the right, that's the new premium. It's messy, it's greasy, it's real, and it's suddenly incredibly valuable. The market is repricing industrial muscle with the same ferocity it used to have for computing power. So this is what I'm calling the arsenal proxy trade. And the logic is actually pretty simple. The US has the money, a ton of it, but it doesn't have the empty shipyards ready to go tomorrow. So where does the capital flow? Instantly to allies like Korea, which become these critical supply chain nodes. The bet is that the big US defense primes, your Lockheeds, your Raytheons, are going to have to lean on these guys hard. Okay, so what's the takeaway? What's the actionable intelligence for us? We need to translate what just happened in Asia into a direct, clear thesis for the US Open. Expect a divided market. The sell-off in Korean chips is a massive warning shot for US tech like Nvidia and Micron. It suggests a pause, maybe some serious profit-taking is coming. But on the flip side, that kinetic theme means we could see a powerful surge of capital into US defense and industrial stocks. All right, let's get tactical. Tonight's entire session is going to hinge on that non-farm payrolls number. We don't predict, we prepare. Here's your execution guide. It really comes down to two clear paths. If NFP comes in hot, a strong economy, expect bond yields to spike. That's going to pour gasoline on this rotation into industrials and put even more pressure on tech. Now, if NFP misses, if the economy looks like it's cooling, you might get a Goldilocks scenario. Yields could settle down and give tech the breathing room it needs to bounce. Keep your eyes on the yield. And these are your lines in the sand, your tactical guardrails. For tech to have a fighting chance, NASDAQ futures need to hold above 25,350, and the 10-year yield has to stay below 4.2%. If we lose those levels, the whole game changes. The kinetic rotation won't be enough to hold up the market. If those levels break, you cancel longs, period. So tonight, the battlefield is clearly drawn.
It's a fight between two very different forces. Are you following the kinetic vector, looking at names like Lockheed Martin and Caterpillar? Or are you watching the tech vector, hoping for a bounce in Nvidia or Micron? The Asian session gave us the map. Now it's time to watch the battle unfold.